He advised clients to get out of gold when it hit 1900. He joins me today to discuss gold's future. He's David Gurwitz of Charles Nenner Research. He's based in New York, and he joins me now. David, thank you so much for being with me.
Thank you. It's a pleasure to have, especially on Canada Day.
David, you had forecasted the top for gold at 1900, and you advised your clients to get out at the time. Before we look forward, what tools do you use to help make your assessments?
The main thing is cycles, which, Charles Nenner is the founder of the Charles Nenner Research Center, and he's considered the top cycle analyst in the world. Cycles come from the Greek word circle. It's basically, according to us, it's a series of repeating top to tops in any data series. So, for instance, gold, if you go back as long as it's been traded, we found a top, for instance, every 8 weeks, every 17 weeks, every 39 weeks, every 65 weeks. And it looks like sine curves. And when they're all topping, going back, we're getting a predictive posture from the past. That's what showed us it was a top. We have a target algorithm in addition to that, which showed 1900 was the level. That was the time to get out. And obviously, those who listen to us are very happy. Now, as we were talking before, what to do in terms of it being a bottoming process, we're very close to a bottom. Longer term, we think it's going to go back to where it was at its highs, which is kind of hard for people to imagine now. It's been down for so long. But we're standing aside now because the target piece of our algorithm is not giving us an exact low entry point, and we're very close to it, but we're not there yet.
So when you say we're bottoming, David, where do you see us headed lower?
It could be a little lower, yes, but it's not like it's going to fall off and go to 800. There's a lot of technical people think it's got a 1100 resistance, 1000 resistance. We think we are not negative. I did mention before, there's a major show that wanted to have Charles on this morning, and they were looking for someone negative. And he said, I'm not negative, and they wouldn't put him on. Charles said, I'm honest. I tell you what I see. So the answer is those who are in gold and in pain and silver, the future is bright, but we're not quite there yet.
So when you say the future is bright, David, are you talking 2 years, 3 years, 5 years?
Yeah. I mean, I don't think it's going to take 5 years for it to reach back up, but it's going to start its way up soon. There's a short-term top around the middle of July. So we're not quite ready to jump full speed in, but longer term, it's going to go back, we think, to where its highs were. It's hard to imagine right now. But again, based on our mathematical algorithms, it seems that's where it's going to go.
David, would you say there's just been an overreaction?
Well, that seems to happen in all markets. Look at stocks. Last 4 years have doubled. And okay, you have printing. People think the printing led to it. The cycles and targets showed that as well. The markets are emotional. And by definition, that's what we assume. The cycles don't show what's going to happen. It's how the reaction's going to be. So, yeah, people have definitely capitulated, and you've got all sorts of pressure, and you've got currency issues that people think are affecting it, which we don't, but that seems to be what's causing it.
So the cycles you look at, David, obviously there's an algorithm behind this. Is this a patent you have?
Yeah. Charles came up with this. I mean, it's a very good question. When he was in medical school, this is helpful for people to understand, and others have seen me explain this. When he was in medical school, he's a doctor. And they said people get admitted to, they put on more doctors on the emergency rooms during full moons because they found more women give birth during that time. That makes sense, cause and effect. About a month later, they said to him, he was in Amsterdam Medical School in the early 1980s, people get admitted to insane asylums all around the world at the same time, not during a full moon. We don't know why. That led to Charles looking into patterns. And he wound up he came to New York, and he was watching a show 30 years ago where there were really not that many business shows then. They were saying IBM was topping. And he said, because of this. And he said, how do you know that's the reason why? And the answer is, it wasn't why they gave. And he went to New York Times by hand. He went to the library and looked at old New York Times and found that there were top to tops that were all topping at this time.
And do you apply this algorithm solely to gold?
Oh, no, it's a good question. We do it for stocks. We do it for bonds. We do it for commodities. We do it for currencies. For instance, copper. We got out of copper 8-9 months ago. It went down. It's bottoming now, but longer term down. Stocks, it's been a 4 and a change year run up. It's got a back and forth now. And we encourage all your listeners to write to the site, charlesnenner.com.
So when we're talking gold, David, do you also look at the fundamentals? Do you track the US dollar? Do you pay attention when Ben Bernanke speaks?
No, we look at the dollar for sure. We look at currencies. We track currencies based on cycles, but we actually think cycles are the most fundamental form of predicting there is. And as people say it's technical, they dismiss it.
So discussing short term now, David, where do you see gold, let's say, up until September?
That's hard to get. I don't have an answer. Generally, the way it works is we can give you a target up after it bottoms, and we're able to do what's called momentum studies. We can't do those now. So I can't give you a number in September. You know, people always say, wouldn't it be nice to be sitting on a boat and just know it's up for 2 months, down for 4 months, you know, but it doesn't work that way. We're very precise.
So you'd be able to track as of when?
When the bottom hits and it goes up and the cycles have all bottomed and our target algorithms bottom, it goes on a buy signal, then we're able to give a target. That's why I want the listeners to write in and get it and watch what we say, because at this moment we can't give you that number.
So David, what are you advising right now in gold?
Well, those who are not crying, I'm getting those. We had said to hedge, you know, we gave a target at 1285 when we said it was to get out of 1900. So far, it's pretty good predicting. When it got past 1285, again, we told those, you know, who were long, and many people are holding physical gold, to hedge. Gold stocks will not be as strong as gold, in our opinion. That's the first thing we're telling everybody. And we think that they just have to live through a little more of this back and forth now till it starts to go up, but it's not going to be a momentous move up right away.
All right, David, finally, what are you liking these days in terms of investments?
In general, caution, planning to go long grains, planning to short bonds, because we've had a 30-year bond increase. Rates have gone down for 30 years. There's a 60-year bond cycle. So bonds are going to be a good short for many years. We think nat gas is near a short-term bottom, but longer-term it's down. We think that the U.S. dollar will be hitting a top next year and then down. So that's something people should look at. And it's really so much the way we do things, because we don't manage or broker. We let you plan your trades in advance across stocks, bonds, commodities, and currencies. And therefore, we think it's very important, given how emotional it has been, for people to sit and actually write out plans of what they're going to do across those different areas. And we're helpful with that.
Fantastic. Thank you so much for your thoughts today, David.
Thank you very much for having me. I look forward to being back.
And thanks for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com or follow me on Twitter on my handle @Daniela Camboni. Thanks for watching.